Okay. Hi everybody, welcome to the Trading Setup channel, your one-stop source for knowledge, techniques, strategies, and just some basic overall trading skills. My name is Niku, and today we're going to be looking at the Stochastic Oscillator. Before we go to the charts, I just need to explain one or two things about the stochastic, and hopefully I'm going to blow a couple of minds today, because it's one of the indicators, although one of the most common indicators, it's also one of the indicators people get mostly wrong. So we're going to have a look at that today. So the stochastic oscillator is a momentum indicator. Okay, it was developed in the 1950s by a guy called George C. Lane, and it's been around for basically 75 years. Okay, so it's a very well-established indicator. It's a favorite amongst traders. A lot of traders use this, and we're just going to have a quick look at what it does, what it shows us, and then we're going to go to the charts and we're going to see practical, we're going to have a look at practical applications of how we can use the stochastic oscillator in our daily trading regimen. Also, guys, please, if you have any questions, if there's anything that I'm explaining and you guys don't quite understand, please feel free, jump in the chats, ask questions. I would encourage you that if we can keep the questions more or less on today's topic. There's a lot of topics I'll be discussing in future. There's a lot of ones that I've already discussed. So if we can kind of keep it like that, but it's not a set rule. Lawrence said hi. Hi, Lawrence. Welcome. Glad you guys are watching. And so yeah, let's have a look at the stochastic oscillator, and then we'll head to the charts and see what we can, if we can pick up a couple of trades. Okay, so the stochastic oscillator, excuse me, identifies shifts in momentum. Okay, so it's designed to try to identify these shifts in momentum before the price actually changes. And momentum is basically the speed of the price movement, and it helps us to see changes in momentum before it actually affects the actual price movement. And so a little bit of physics. You guys know the faster something is moving, the harder it takes, or the longer it takes to come to a stop. That's why we have speed limits on our roads, because if we travel, the faster we're going, the longer it's going to take for us to stop. So that is the concept that any momentum indicator tries to bring across. It's trying to show us where price is speeding up and where price is slowing down. And the stochastic is brilliant because very often we can see a change in the momentum before this change in the momentum actually affects price. Okay, so like I said, it was designed by a guy called Lane, and Lane said, quote for this is a quote of his: "The stochastic doesn't follow price, it doesn't follow volume or anything like that. It follows the speed or momentum of price." Okay, so it's an indicator that is showing us shifts in the momentum before the shift translate over to the price chart, and we can potentially see areas where we could get entries where price might start turning, and we get that information. We can see the shifts, just like I said, we see the shifts starting before the price actually is affected by this. Okay, so the stochastic consists of two lines. These two lines will move between a value of 0 and 100. It's oscillating between these two lines. That's why it's called the stochastic oscillator. And usually it will be a red line, or some platforms orange. This is your K line, and this is calculated using price. And then you have a blue line, which is called the D line. You will often see there's three parameters you can enter into the stochastic oscillator. The default settings on most platforms will be 14, 3, and 3. So the 14 is the value that your stochastic is calculated on, your percentage K is calculated on. If it's 14, it will take into account the last 14 candles on the price chart. So the longer you make it, the more candles will be considered in the calculation, and the lower you make that value, the fewer candles will be taken into consideration. Then you get the D line. Your D line is by default set to value of 3, and this will then be basically a moving average of the K value. And if it's set to 3, that will be a 3-period moving average. Okay, so that's your D line, or the blue line. And you can change these settings as you want. Personally, I leave it on default. It's good enough like that. And then thirdly, we have another value we can change, which is the smoothing. This is also set to default value of 3, and this will just be the higher the value goes, the more smooth your stochastic will become. Because especially if you're going on lower time frames, like a 1-minute chart or 10-second charts, you will notice that your stochastic is tends to become very jittery. So if you increase the smoothing value, it will flow a bit smoother. Okay, so that's what the stochastic is. So now let's head on over to the charts, and we'll look at three ways that the three most popular ways that the stochastic is used, and we'll see if we can hook a few trades. Okay, so I've got a Euro USD open here on a 1-minute chart. The only thing loaded at the moment is the stochastic, and I'm going to kick off. The first thing we're going to have a look at is one of the common mistakes people make regarding oversold and overbought levels. And we had a very beautiful example of this right here. Quite often people will say, okay, let me start this way. So when the stochastic goes above the 80 value line, it is considered that the asset or stock or whatever it is you're looking at is entering an overbought area. And when it dips below 20, it is considered to go into a oversold area. This does not, however, mean that the second it goes into one of these areas, we can take a reversal trade. Remember, we said the stochastic is showing us momentum. And if we look at this example here, where we had this very strong bullish push on Euro USD, my stochastic went over the 80 line just as this move started, because it was struggling to get through this area for quite some time. And just as it broke through, my stochastic went over to the 80 value line, and it didn't come down. We did not see a change in the momentum of price. This resulted in price just carrying on and on and on and on. Okay, so if you want to use the oversold and overbought levels for reversal trades, you need to have a look at when price is when the momentum starts going the other direction. Okay, so in this case here, we could have waited for price to come back down out of the overbought area, and we could have taken a sell trade here. On the 1 minute chart, we could have taken a 1 minute expiry, and this would have been a good trade. Okay, so actually, before I do this, please just remember, guys, it is never a good idea to use a single indicator to try and find entries on a chart. Okay, so we use I'll be adding a few indicators in a bit to show you guys how I check for how I determine entries, but I'm just gonna, like I said, I'm just explaining the stochastic oscillator, the popular ways that it's being used. But it's always a good idea to have one or two or three extra indicators just to confirm each other, to cross-reference, and if both, you know, if two of your indicators gives you the same signal, then it's a better, so you've got a higher probability of actually winning the trade. Whereas if you're using two, for example, and you get one only one entry signal or an entry signal from one of them, and not the other, you've got a lower probability of actually winning that trade. Okay, so I'm going to be explaining these, but please keep in mind, personally, I would never use the stochastic oscillator by itself or any other indicator for that matter. So that, just so we're clear. Okay, but let's have a look. Let's continue with ways we can use this. Okay, so we're looking at when price is overbought, or when the stochastic oscillator shows that that the asset is overbought. We have to wait for the momentum to slow down and start turning. Okay, so before that, we can. It's more likely that the price will continue in the same direction as long as the momentum is there, and it doesn't show any signs of slowing down. It's a bad idea to try and take reversal trades in general. Okay, so it's like I said, we can have a look at this area here as well. When the momentum started taking, or when the oscillator went into overbought area, we had price coming down, or the oscillator started moving out of this, and momentum started going bearish. We see that we had a bearish price movement, but in this case, if you were doing 1 minute trades here, for example, you would have gotten an OTM. And this is why I'm saying we can't just use the oscillator by itself. You will quite oftentimes get burned. We do need to cross-reference some of the, use other indicators to cross-reference and such, but we'll have a look at that in a second. Okay, so this is one popular way that the stochastic is used. A second way that people tend to use the stochastic oscillator, and I think I should make this just a little bit smoother, just to get a better idea. A lot of times, or often, the stochastic is used to trade the crosses of the K and D lines, meaning if your stochastic shows that the asset is oversold, when your K line crosses your D line, that will then signal a buy entry, and then if it's overbought and your K line crosses back down, that will indicate a sell entry. So this is another popular way that it's being used. We can have a look at the last few crosses. So if we start here, we can see we had the cross on that candle there. That would have been a buy trade, and you're going to get fake entries as well, fake signals. So if we this big red candle caused the stochastic to cross there, but we can see that it just crossed for literally one candle, and the next candle was pushing up again. So yes, we can see there was another cross. That would have been a good trade if we took it 1 minute. Where was the cross? That was the cross on that candle, cross upwards. You could have taken a buy. Very difficult to read it when it's up here though. If we can maybe say where it opened up, we could have taken a sell trade there, but then here we would have been didn't really cross there, didn't really cross there, it was just level, and there was another cross. But if we took a buy trade, we might have, depending on where we got in, we might have been burned on that. Okay, so that's the second popular way that that people use the stochastic to find entries on charts. Let's just change that back to default. Third way that the stochastic is often used, and this is my absolute personal favorite, is divergence. Anybody that's known me for more than 5 minutes knows how much I love trading divergence, and I use the stochastic mainly to find divergence on assets where I can take trades then. So we had two examples here in this area. First one was a hidden bullish divergence. Let's draw this in. I'm going to delete those lines. Let's draw the divergence in here just to show you guys. Make that nice and bigger. Okay, so we had some hidden bullish divergence here. So price was moving in an upwards direction, but it was making corrections while it was running upwards. This high here, or this low here, is higher than the previous low. So this is typical of a bullish movement. Price makes higher highs and higher lows. And in this case, we had price making a higher low, excuse me, but my stochastic, as we can see, made a lower low. So that is hidden bullish divergence, and we could have taken a trade here. Usually when I'm looking at a chart, depending on the time frame, I like 5 or 6 candles for my divergence to play out. So if I'm in this case looking at a 1 minute chart, I will take a 5 minute trade. Or if I'm looking at 10-second charts, I will take a 1 minute trade. But I do need a few candles. I never play divergence on a single candle. Okay, so but this would have been a good trade if we on this big green candle here would have been the cross of the stochastic, confirming that it's turning upwards. I could have taken a trade on this candle or on this candle, and if I'd taken 5 minute trades on any one of those two candles, that would have been a good trade. And immediately afterwards we had some normal bearish divergence where we can see that price made a new high here, but my oscillator did not quite make a new high compared to the previous high of that the oscillator made. So that gave that was normal bearish divergence. And again, once it's turned, that meaning I would have taken it on this candle, because I do wait for the stochastic to cross down before the last cross of the stochastic confirms the divergence for me, and that's when I enter my trade. So we would have taken a 5 minute trade here. This would have been a sell trade, and it would have been a good trade as well. And we can see examples of this quite often. There is a little bit of divergence there. If we look at the low that the stochastic made here, and when price came down lower, made a new lower low, my oscillator just did this little jump. It turned down, but it turned up immediately again. So again, once crossed, that would have been that candle there. So either this candle or that candle would have been a 5 minute trade for me. In this case, it would have been a buy because it's normal bearish divergence. Okay, so and we can find a lot of it. You can find a lot of examples during the day. Some days you get a ton of them, other days not so much. It does happen as well. Patience is the name of the game. But yeah, those are the 3 ways that the stochastic oscillator is commonly used for. So we've got the oversold and overbought position or areas where people will take reversal trades. Then we have the K and D crosses, where people will use that to give sell or buy entries. And then we have divergence to find buy or sell entries. Okay, so I'm gonna add my normal indicators that I usually use when I'm trading. I'm gonna add them back, and then we're gonna look at how we can confirm entries from the stochastic, just using my I'm just gonna take that off quick. Oh no. There we go. And let me just change these colors quick. Okay. Okay. So we've got the I use the RSI and the ADX when I'm trading. I prefer these three indicators, and I'll add. Oh yeah, there we go. Okay. And then I've got three moving averages and three moving averages on my chart. These are simple moving averages, and it's a 50, a 100, and a 200. These are the classical moving averages that people have been using for ages. And then, as you guys can see, I've got the ADX and the RSI all set to default values. I don't change anything. And I'm just going to show you guys how I the other indicators to tell me if I do get a signal from the stochastic, how I can confirm it, and what will give me a better chance to possibly win a trade. Okay, so in this case here, if we look at this, so the RSI is also a momentum indicator, and I tend to split it down the middle, because so anything over 50 will be bullish momentum, anything below 50 will be bearish momentum. When both of these, when the stochastic heads to the oversold area and my RSI moves into negative momentum or bearish momentum, then I can consider taking trades. Okay, so I will consider taking trades. I will not wait for the stochastic to reach as low as it can, because how can I put this? When you're trading, it doesn't matter what indicator you're using. Even we're using the moving averages. If you're using any oscillator that you're using, the parameters of that indicator, the extreme parameters or the middle parameters, depending on how the indicator works. You can think of those areas as magnets and price moving between those. So the closer it gets to a certain area, the more likely it is to hit the area, if that makes sense. We can see, if we look at the moving average, if we look at price movement related to the moving average, in these areas where it didn't come close, we had a small little correction and a drop, and here as well, small little correction and a drop. But here, when it gets, the closer it gets, the more green candles we saw. Okay, so the bigger the correction became, because price it's the closer it gets to this one, it's like it's wanting to hit it. Okay, so this is not a rule, though. Okay, it's not a law that it will always happen, but it tends to happen. Same goes for the stochastic, the oversold, and the overbought areas. When price is getting close to the oversold and overbought area, the closer it gets to the 20 area, for example, the more likely it is that it's going to hit the 20 area and actually go into oversold. It won't often be that price turns just before, that your oscillator turns just above the 20 or just below the 80. This will not happen often. It does happen, but it won't happen often. More often we will see it actually hit. Okay, so if I'm looking at price, the stochastic heading for the 20 area, okay, and then my RSI goes into bearish as well, I will consider taking a trade, 1 minute, 2 minutes, or something like that. Okay, so give it a candle or two, because it's telling me that once both indicators go into bearish momentum, it's fairly likely that this momentum will continue at least for a short little bit. Okay, and the opposite will be true then for bullish momentum. So let's see if we can find a nice bullish example. By the way, this is something I love to trade when I have two momentum indicators, and they're both showing bullish. The stochastic was climbing here, so it was showing me bullish momentum, but my RSI just simply refused to go into the bullish momentum area. It just kept rejecting off the middle line. So what I'll do here is when I see the stochastic coming down again, I will take a sell trade, because it's telling me that the momentum, that the bullish momentum that it was showing, because my RSI refused to show bullish momentum, and as soon as the stochastic goes into bearish, then I will go with it, because I've got two indicators showing me bearish momentum, and I'm just going with price. Okay, so it's more likely if both goes into bearish momentum, it's more likely that it will continue for a minute or two or three, than it is that price will just suddenly go into bearish momentum or into bearish movement. Although that does happen. Okay. Again, there's no fixed rule. Nobody can tell you that if this happens, price will do this always. There's no such thing, guys. Please remember that you do have to, like, I want to say, kind of get a feel for it. We had a very recent example here as well, and here also here where the stochastic came down, but as soon as it tapped, it started turning upwards, and my RSI got rejected. It went back into bullish. I could have taken a trade or two there. Same with this. Currently, right now, the stochastic is showing bearish momentum. It's busy coming down, but it's not. It's a very what's the word? Relaxed drop, if I can put it that way. It's not coming down sharply, so I'm going to wait a bit for it. I would like to see it come down sharply, and then if my RSI does not break through and go into bearish momentum, the minute that the stochastic turns up again, I will take a trade in that in the direction of the momentum that both those indicators are showing me. Okay, another way we can that I often use to take trades with the stochastic or to confirm is using my ADX. I absolutely love the ADX indicator, and here's the reason why. If you've used the ADX before, you'll know that it's three lines. Okay, so we've got the green and the red are your DI lines. The one is positive, the green is positive, the red is negative. This shows you the speed at which price is changing. It doesn't show direction. Well, no, sorry, I'm lying. It does also show direction, but it shows you you can kind of think of it like the rate of change, but it's not quite the same as rate of change. But it shows you how quickly your price is accelerating, taking into account mine is set to 14, so that will show you how quickly price is accelerating compared to the last 14 candles. The yellow line is the actual ADX line. This does not show direction, but it shows the strength of the movement. Okay, so if your ADX is moving upwards, it's telling me that this current move, the longer the ADX is moving upwards and the higher the value goes, it's telling me that there's more strength coming into this move, into whatever the move is, be it down or up. Remember, it doesn't show direction, it only shows strength. Now, here's the thing. If you look at this really nice push we had here on euro, when my ADX started going up, I had my stochastic in the overbought area already, telling me that there's momentum there. We've got bullish momentum on the stochastic, and I've got my ADX coming up, telling me that the strength of the move is increasing. So somewhere here, probably in this area here, because what happened, remember the moving averages are used as dynamic support and resistance areas. So we broke through here, had a retest, it failed and it went upwards. There was a brilliant buy opportunity. My stochastic, oh sorry, my ADX was still climbing really strong, so it's telling me the strength is just increasing in this move. While my stochastic is super high, this will not, if I see it like this is an absolute buy entry for me, not a sell entry at all. And a lot of people make, like I said way in the beginning, a lot of people will make the mistake that the stochastic is oversold, or sorry, it's overbought, it has to come down, and they start selling into the price movement. And quite often they will martingale as they are losing. They'll keep on martingaling, and that's when accounts get emptied in a few minutes. So this is how we read the movement of price. Okay, so we need to understand what are very important. Whatever indicator it is that you're using, you need to understand what it is showing you. So this is showing me that the momentum is really strong in the current move. So I will not take sell trades while the stochastic looks like this, ever. But in fact, if my ADX is climbing like this, in the same direction, I will take buy trades. I will look for buy trades much rather instead. Okay, so that's one of the ways we can use it practically, and we're using another indicator to confirm our trade for us. We can see this happen actually quite often. We had the drop here and the ADX was climbing. We can see the ADX climbing. My stochastic went into oversold, and you would have had a nice sell opportunity there. Same here. Did I move this now? This was the one we did. Same here, where price was moving up. We can see, though, and this is where it kind of gets tricky sometimes, and where you need to pay attention to one or two other things. The stochastic left the oversold area, but my ADX was still climbing. So what happened is price went back for a retest and it failed, and it did it again. You can see the ADX was climbing this whole time. Oh, do I have auto scroll? No, I don't. Why is it moving? We had the ADX climbing the whole time up until this area here, but these were retests. Okay, so my oscillator came out, but when it went back down again, and my ADX didn't, it dropped on the retest here, but then it started climbing steadily. The I plus was slowing down, telling me that there's no upwards movement at all, while the red was climbing. So this would be then sell opportunities again, where we can look for some sell trades. Okay, so hope this makes sense so far. Again, guys, if there's any questions, please ask while we're here. This is a good time to get those questions in. So yeah. Okay, also guys, those of you watching today's video, if you are with PO Broker, I've got this for you guys. Okay, Stochastic 80. This will give you a 80% deposit bonus. And so if you're with PO Broker and you want to use this, or you want to make use of it, that's your code. Okay, so on the screen again, Stochastic 80. Okay. All right, so that basically covers the stochastic. We can okay, so I'm still keeping an eye on price here. My RSI is still bullish, so if the stochastic turns up again, we did get a drop touching 50. It's turning upwards. I should be able to take a naughty buy here, because my stochastic is turning positive, although I should have probably waited for it to enter the into the overbought area. Okay, so that's the ideal thing, really. I did rush this a little bit, but it should be fine. We are moving upwards. It just turned up. I've got bullish everywhere. I got my ADX climbing a little bit with while my DI is dominant. So there's a decent chance that I will win this. If not, then not. Let's just see what's happening. I'm just gonna miss it. Gonna miss it. No, there we go. Awesome. Okay, fantastic. So the stochastic is a really brilliant indicator. If you understand that it's showing you the momentum, if you understand that once it hits overbought or oversold, it does not mean you can put it in reverse. That's a very big mistake a lot of people make. As soon as it enters overbought or oversold areas, people start selling, and you can go and backtest this a little bit and see how many take a day's worth of trading or a week's worth of trading, go through the charts and have a look at how often if you traded it like that, what would have been your win rate if you took every single entry during, let's say, the UK session. This is what we discussed this earlier in previous videos. Whatever strategy somebody is showing you, whatever new thing you're learning, it's crucial that you test it yourself. It doesn't matter where you hear it. Even if I'm saying something or explaining something, please test it. Testing serves two purposes. First of all, you're going to see if I'm talking nonsense. So you're going to find out for yourself if the strategy is profitable or not. But secondly, testing will also assist you in understanding the indicator more quickly. Okay, so it's crucial always to test any indicators or any strategies that you see online, or that if somebody tells you a strategy, please test it. I really do encourage everybody to do this. Don't just take somebody's word for something, ever. And it's to your own benefit to test. It's definitely to your own benefit as well. Okay, so how many people we have on? 3 people on. Anybody have any questions? Anything that's unclear that I've explained at all? Nothing. Nobody's got anything. Okay. So there is a little bit of a delay on the stream, so I'll give this a minute or two. Maybe somebody's typing something. But yeah, I hope today's video helped you guys understand the stochastic a little bit more. Most traders have this on their charts, and it really is a very useful indicator. But as with any other indicator, I know I've said this 100 times before, and I will keep on saying it. It is really important that whatever indicator you want to use in a strategy, please read up on it. Make sure you understand what it is showing you, because you cannot use the data if you don't understand what data it's actually giving you. There's no indicator you can just use without understanding it. So read up on it. But I hope I helped at least helped a little bit helped you guys understand this a little bit better. Hopefully, with a little bit of practice, you guys will be able to implement the stuff we talked about into your current strategies. If you're not using it already, if you're using it already, hopefully maybe I helped you just understand it a little bit better and maybe give you that little bit of an edge for all the guys that's using the stochastic. Okay, so I think we've covered everything. Maybe let's look at a 10-second chart quick. 10 seconds tend to be a lot more choppy. So if you want to use the 3 techniques we discussed today, if you want to use those on a 10-second chart, just know that the 10 seconds is a lot more choppy. So you're going to get a lot more, should be getting a lot more, I want to say fake or lower probability signals and so forth. I never use the 10-second chart for the, I don't know, it's easier, it's going to be easier for me to say that when I'm trading on a 10-second chart, I only use the stochastic to find divergence. I don't use it in any other way, really, when I'm looking at on 10-second charts. But we can have a look at this area here, for example. We had the RSI in bullish momentum. Stochastic took a little dip here, but we can see that it hit the oversold area right on the moving average. Okay, so that's clue number one. It hit the oversold. Doesn't mean I'm taking a trade, but what it means is my RSI is still basically in bullish momentum. It dipped there for one candle for 20 seconds. It dipped and then it went bullish again. What I'm going to look for is my stochastic coming up. So here will be a trade for me. If the stochastic is heading into this and my RSI stays in the bullish, on the bullish side of the, it still shows me bullish momentum, and the stochastic goes into bullish momentum as well, and it goes into overbought, that's a buy signal for me. But this will be here, not when it's hitting the oversold level. Okay, so I never play the bounces. I personally never do this because I find it's way too it's an ineffective strategy. Okay, so it's possible to use this on a 10-second as well, but mostly I'll use this technique on the 1-minute chart, and then also it works on any time frame. The higher you go, the more stable it will be. So those of you trading forex, you can use this on a 1 hour or 4 hour chart as well. You can use it on a 5-minute or 15-minute chart if you want to use. You can use it like on a 5-minute chart if you want to do 1 hour expiries, for example, when you're trading options. So you've got a range of options available to you. It's not that you have to use it on a 1-minute chart. So yeah, it's very diverse, and as with any strategy, any good strategy anyway, this will work on multiple time frames. It doesn't matter what time frame you're looking at. Just know that the shorter your time frame gets, the more jittery your indicators become, and the more care you should take to read them. Before you take entries, think twice before you take entries left and right on like a 10-second chart, for example, or 5 seconds. I know some people trade 5-second chart trades and stuff like that. So just keep that in mind as well. Okay, so guys, thank you for watching. It's Thursday, so the weekend is around the corner, and yes, I will see all of you on in next week again. In the meantime, have a great weekend, and as always, trade safe, trade smart, and I'll see you guys next time. Thanks for watching. Cheers.